Good morning, everybody. We have a mixed trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. May corn futures up 2 cents at 562 and a half. December corn is up 2 at 487 and a half. May soybeans unchanged at 1408 and 3/4. November soybeans are down 1.5 at 1269 and a quarter. May Chicago wheat is up 8 and 3/4 at 625. May Kansas City wheat is up 11.5 at 574 and 3/4. May spring wheat is up 11 cents at 635 and a half. A couple of housekeeping notes here this morning. I will be hosting the PM edition of Agri Talk this afternoon. Ken Morrison will be my guest. We've got a lot to talk about. I think we're going to talk a little bit about the demand picture for corn and soybeans as we head into a new marketing year. This 21-22 situation is kind of interesting. Me and Ken have talked about ethanol a little bit, and we're going to talk about some other stuff there and whatever he wants to talk about. Yesterday, I posted a podcast episode and also a YouTube video with Dr. Richard Sander. And Doc, if you don't know who Doc is, he's an incredibly interesting person. Doc, back in the 70s, helped the Chicago Board of Trade to develop interest rate futures. He's really a pioneer in this business. He's credited as being the father of carbon trading. He started the Chicago Climate Exchange a long time ago. He's got a million different accomplishments under his belt. This is a phenomenal conversation that you absolutely have to listen to. We talk about everything from interest rates and how it may affect you on the farm. We talk about policy. We talk about a lot about the Fed, monetary policy, the stimulus, COVID. We talk about farming. The stuff regarding carbon credits is very, very interesting, and Doc has some extremely interesting opinions on the outlook there. So if you have not checked this deal out yet, certainly do that. This is in my opinion, a must-watch or must-listen episode. To get into some of the headlines here this morning, we've got a USDA report tomorrow. This is the monthly crop production and Usda report. I'll talk a little bit more about the estimates and everything ahead of the numbers tomorrow, but traders generally expect friendly corn and soybean numbers. We're looking for lighter U.S. carryout projections from USDA, likely as a result of higher export numbers. That's kind of what the trade has built into this thing. And I know that the expectation ahead of the report is that we're going to see a corn carryout number closer to that like 1.4 billion bushel or something like that. I think the trade's really trading something much lighter than that, maybe closer to 1.2, maybe even lower than that. But in any case, we're looking for some friendly numbers. The trade expects mostly unchanged production numbers for Brazil, smaller production numbers for Argentina. The wheat number is expected to be neutral to slightly bearish. So this shouldn't be the biggest report in the world, although I suppose there's always the potential for a surprise. U.S. weather appears mostly favorable for row crop planting. Most of the Corn Belt's going to see less than 1 inch of rain over the next 7 days in total. The 6 to 10 day maps call for below normal rainfall, also below normal temperatures. Drought slated to persist up north in North Dakota, parts of South Dakota. Not really much relief in sight. So I think that corn planting and row crop planting in general could move pretty quickly here given the forecast. The S&P 500 is slated to open at a fresh all-time high this morning. Tons of optimism here regarding an economic recovery. Improved outlook in Europe, I think, has certainly helped. The Fed, of course, continues its easy money policy. The Fed is in absolutely no rush to scale back these bond purchases. So the stock market just has everything going for it right now. Ethanol production improved again last week. Weekly output 975,000 barrels per day. That was up 1% on the week, down about 2.75% versus the same week in 2019, which is kind of what I'm using for a comparison. Now, 2019, of course, was our last pre-COVID benchmark year, if you want to call it that. Gasoline demand was down about 1 percentage point on the week. It was down 4% versus the same week in 2019. Ethanol stocks were down again. They remain at their lowest level seasonally since 2015. Now, we've got a couple of these big plants coming back online, one in Iowa, one in Nebraska. I think we should see much better ethanol production here in the coming weeks and months, and that's despite the fact that we've got high corn prices. Production margins for ethanol producers here in the U.S. are good enough. We've got a situation in which demand for ethanol is good, stocks are down, ethanol prices are up, so ethanol looks good despite the fact that we've got some higher corn prices here. The cattle market finished yesterday higher, and we've seen a big improvement in cash cattle. There was some cash cattle as good as 122 yesterday, outside of the Fed Cattle Exchange, 120 to 121. But still, that's a big improvement that we've seen here over the last 2 or 3 weeks. We'll see if the board can sustain these gains and keep moving here this morning. In the outside markets, we've got the S&P again up 13, 14 points, slated to open at fresh all-time highs. The Dow is flat. We've got gold and silver a little bit higher. U.S. dollars a little bit lower. Crude oil is down 29 cents at 59.47, and the May WTI, the bonds are mixed. If you guys would like some more information from me, as always, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan. If you'd like to know when, how, and specifically I'm pricing corn, soybeans, and wheat throughout the year, check out that subscription service. It includes my morning email, text message service, subscriber-only videos, all sorts of interesting grain marketing related content that I think you'd be very interested in. Certainly check that deal out. Everybody have a great day today. I will talk to you same time tomorrow.